It's Brian Preston, the money guy.
We talked about 529s. I think we've shaked that tree a pretty good chunk.
It's not the only way to pay for college.
Let's talk about some of the other things, because you've been educated, but that doesn't mean somebody's not going to try to talk you into something else, or you're going to even say, hey, I've created a better mousetrap. So Let's talk about some of the ways we hear people talking about funding education.
Yep.
One, Roth IRAs.
Roth is one that is, people ask us about that all the time, but I don't know that I would say Roth IRA is the best way to pay for college.
It's definitely, the reason I don't like touching Roth IRAs is because that money, remember, you can't do retirement loans. Mm-hmm. So you have to do it all, it's the kids can go get student loans. You can't do that for retirement. So it's perfectly, we need those assets working for retirement. So leave that retirement money alone.
You gave this great example early on. We're talking about, if you pull your money out of 529 and pay for K through 12, you're not letting that money do what it can do. We talk all the time about you have your army of dollar bills that is working to build your financial independence. You don't want to take your army out of the battle early. And when you use Roth to pay for college, that's exactly what you're doing.
People get excited because you do get access to the corpus or the contribution tax-free.
Yep.
But guys, just be careful. I'd rather have that tax-free growth, that 88 times over that y'all hear me talk about all the time. Take advantage of that. Don't use it for juniors education.
So we're going to say Roth. No, let's not do that.
I don't like that idea. Life insurance. There's a lot of people out there pushing. Matter of fact, I was even surprised when I was looking at some of the education websites. I was like, which one of these guys is related to a life insurance agent? Because they were talking about how great it was that you could build up cash value. This is the way these things are sold. You can start, as soon as your child is born, you can start investing in some permanent insurance, and then you're going to get access to that cash value tax-free because you just take a loan from the policy.
Tax-free.
And then guess what? This doesn't count against you for financial aid purposes. That is how this thing is sold. Now, here's the part they don't tell you. It can take you 10 years or more for your cash value to even surpass what you've even put into the plan.
Because remember, when you're buying life insurance, some portion of that is paying for the actual cost of insurance.
At least 50%, if not even more, of the first year's payment is going strictly to commissions.
That's right.
That's why you're kind of behind. It's going to take a decade likely to get you caught up.
Yep.
And then here's another thing, ongoing costs. I was just picking on that Virginia plan because it had internal operating expenses of close to 0.8%. The average permanent life policy charges upward to 2% per year for administrative and investment costs. That's a pretty big headwind. So just be careful. I don't love life insurance for college funding. Student loans. How do they work? There's two types of student loans. There's federal and then there's private. Look, federal is probably going to have a lower interest rate because it's somewhat, it's backed by the government. There's been some changes. I know in 2010 they changed all this. My thing on student loans is know what your major pays. Know what if you're going to go into a major that doesn't pay well, maybe you don't need to do private school. Maybe you need to do public or even community college. It's just it's the whole plan. When we do retirement plan, we say begin with the end in mind.
That's right. I was going to say the exact same thing, Brian. Is one of the things that bothers me is how easy it is for students to get student loans. And I've even had family members and loved ones who the advice they were given when they got to school was, hey, go get as much as you can each semester. Go get as much as you can and we'll just figure it out. Go get as much as you can and we'll figure it out. That's horrible advice. You don't want to just rack that up. And again, we're trusting 18, 19, 20-year-olds to make these huge decisions, rack up this debt. Student loans are a great resource to be there available, but they, just like you said, they're a chainsaw. They can be very effective if used responsibly, but if used irresponsibly, they can really set you behind.
And be careful, kids. I don't want to put you against your parents, but just because they say go get what you need, and then by the end of college, I'll just pay it off. I've had a lot of sob stories where you run up all this student loan debt, and then mom and dad they have to sit you down at the end of college and be like, yeah, things didn't work out like I thought they would.
Right.
So that's why if you're subsidizing lifestyle while you're in college, you will regret going to that buying the beer for the kegger with your student loan money. I mean, but I know we all laugh, but there's a lot of people that are subsidizing lifestyle and they don't realize they're going to be paying for that keg of beer for 10 years.
That's right.
I mean, it's just scary, scary stuff.
Keg of beer is going to cost them thousands of dollars.
I say it with a little laughter, but it's just sad. It's kind of a
right.
tragedy
That's right.
/ comedy all in the same time.